Holy smokes, we've seen some increases in the stock market recently, especially among some companies. Tesla stock, for example, is now over $2,000 a share, with some bull analysts saying that it could go up to $3,500 a share. That is insane. A year ago, we were hovering in that like $200 to $300 range, and now it is $2,000 per share. So the question is Tesla stock a good buy? Is it worth it? I'm an accountant, so I love looking at the numbers. So let's dive into the numbers real quick. So Tesla has a 52-week low of $211. So within the last year, their stock dipped to $211, but it has a 52-week high, which is currently just under it. We have seen $2,100. So Tesla stock has gone from $211 to $2,100. That is growth of 10 times. So in my accountant brain, I'm like, cool, if it's grown, if the stock price has grown by 10 times, has revenue grown by 10 times? Has earnings grown by 10 times? In the case of Tesla, that is a big no. Earnings has not grown by 10 times. Revenue has definitely not grown by 10 times. So why the huge increase in stock price? So the next metric I went and looked at is the price to earnings ratio. The price to earnings ratio simply gives you the amount of money that you are going to spend to get $1 worth of earnings. So for example, if you bought a stock for $10 and it was in a company that was making per share $10 a year, then your price to earnings ratio would be 1, meaning you would spend $1 for every $1 that the company earns for your stock. So Tesla's stock is insane. Their price to earnings ratio is mind-blowing. It is $1,000. So their price to earnings ratio is over $1,000, meaning you are spending $1,000 to buy $1 of annual earnings. Yes, you are spending $1,000 for $1 of annual earnings. Mind blown, right? I mean, that is insane. Nobody in their right mind would be like, I'm going to spend $1,000 so that I can make $1 a year. Think of it this way. If Tesla operated the exact same way that they have been, and their earnings didn't change or their revenue didn't change, that means it would take you 1,000 years to recoup your investment. If you put $1,000 in and you were only earning $1 a year, obviously it would take you 1,000 years to get your $1,000 back. So if your goal is to maximize your wealth and your earnings in your lifetime, obviously if you are simply looking at a price to earnings ratio, then Tesla is a bad buy because you are not going to ever actually get your money back in this lifetime. But if you own Tesla stock or you're thinking about buying it, don't run away just yet, because obviously people do not invest simply off of a price to earnings ratio or expecting the company to pay them back, because a lot of times companies don't even offer dividends. And Tesla currently is in that spot. They are not paying dividends to their shareholders. So if you put $1,000 in, it's not like they're actually going to send you $1 each year. They're going to keep that money and they're going to invest it into the company to help that company grow. Most people, when they invest in the stock market, they are investing almost in an appreciation standpoint. So they are expecting that stock to appreciate in price, to grow in price, and that is where you're making money. So if you bought Tesla stock for $2,000 and you expect it to go to $3,500, like these bull analysts are saying, then you could sell it for $3,500 later, and obviously you make a net profit of $1,500 because you're only $2,000 into it. So most people invest on an appreciation standpoint. The stock market is driven by a lot of things. Obviously, numbers play a huge role into it, but I would dare say the biggest thing that the stock market is driven by is perception. So if somebody perceives that the stock market is going to go up, then the demand for stocks increase, and whenever the demand for stocks increase, then price goes up. It's simple economics. So what you've really got to decide while looking at a stock is obviously numbers play into it. If their numbers are getting better, then you would expect people to say, hey man, Tesla's earnings are going up or their revenue is increasing, that must mean they're doing better as a company. And so the demand for that stock will increase as well. But you've really got to look at perception as well, because not only do numbers play into it, but there's a bunch of other things that can drive a stock up. Using Tesla as an example, obviously some people will say, hey, I'm just going to look at Elon Musk. He's super, super smart. Even just the perception of Elon Musk sent somebody to space in an entirely different company than Tesla, something that has a zero impact on Tesla's bottom line. He says, all right, I'm going to send somebody to space with his company SpaceX. And because he was able to successfully do that, people see that and say, man, he must be a really smart person. So let's go invest in his publicly traded company, Tesla, because he is going to be able to accomplish great things with Tesla. Now, I'm not ragging on people who went and bought stock in Tesla because a different company was able to accomplish something. Obviously, Elon Musk is a smart person. Otherwise, how could he convince people to pay $1,000 for $1 worth of earnings? No, I'm kidding. Obviously, he has done some amazing things. He's built some amazing companies. So perception is a big one. And if you perceive that other people are going to think, hey, Tesla stock is going to go up, then Tesla stock right now might be a good buy. But if you look just at numbers, the PE ratio is insanely high. I would never want to buy something if that was the only reason I was buying it. But stocks can appreciate, they can grow as far as price goes because of demand. So you have to look at what you believe demand will be for that stock in the near future and base your decision off of that. Obviously, the stock market is a finicky thing. A lot of things can affect demand. One bit of news can make a company dive for a little bit, but then good news can make it go back up. And so watch people's perceptions, people's expectations, and you can use that in your trading. But one of the best ways to make money in the stock market is just consistency. If you try and time the market all the time, sometimes it gets a little bit tough to gauge whether or not people expect it to go down or up or down or up, and you can lose if you obviously guess wrong. But history shows that if you are consistent over the long term and you are investing, then most likely you are going to go up, you're going to see an increase in your wealth, and you'll be better off for it. Thank you for watching. If you have not done yet, please subscribe. We'll catch you guys next time.